Good morning, traders. It is 8 a.m. Chicago time on Thursday, the 22nd of June, 2023. This is episode number 2488. Thanks for joining me yet again this morning. Beautiful day here in Chicago. I remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A quick mic check, please. Just let me know how the sound's coming across. Thank you. Let's take a look at the pre-market summary sheet from Convergent Trading here. Market posture, the risk posture this morning is mild risk off, just slightly. Not much to account for here, nothing too dramatically different. What's interesting is crude managed to push through and follow through to the upside yesterday, but it is just kind of cratering the other way this morning. It's down almost 3%. Accenture reported this morning. It came across at $3.19 as expected at $3.04. Really not much left. Not much left here on the earnings side that would be quite significant. Darden Restaurants. After the close, we don't have anything significant. Pretty much everything is $500 million or less in revenue, so I don't really pay attention to that. The news today, very, very, very quiet. The big news is Norway was expected to hike rates, and they ended up doing a surprise 50 basis point hike. Norway's market is not so big that it might have an impact on us, but it does provide some color when it comes to central bankers and how they're looking at inflation. The Swiss National Bank also raised by 25 basis points in line. And then today, Fed's Chair Powell does the same testimony as he did yesterday, but to the U.S. Senate Banking and something else committee, Banking and Housing Committee or something like that, Banking, Finance, and Housing or something. But this is an annual testimony that he does. There were a lot of comments regarding what was said yesterday by Powell, but all in all, it's completely in line with what was released last week with the FOMC decision. And so on. So there's nothing really shocking here. Oh yeah, the other one is the BOE hike by 50 basis points. They went from 4.5% to 5%. We're expected at 4.75. That's also really important news. That came out at 7 a.m. Eastern this morning. That's also important. Should have made it on this sheet here, but apologize for that. Anyway, so for today, Fed's Powell at 10. More questions, more political posturing, not expecting too much there. We get crude oil inventories. In terms of the S&P, because I want to just dive into the technicals here as quickly as possible. In terms of the S&P, we have a B-shaped profile. We've got really good volume overnight, by the way, 212,000 contracts. If you recall, yesterday it was around 140,000 or so. And the inventory is 89% short. So we've moved away from yesterday's close and settlement to the downside, and 89% of that 212,000 contracts traded below yesterday's close, which tells us the inventory is leaning short compared to yesterday's settlement or close. 20.5 points of range is pretty good for the overnight session, and the point of control is shifted to below 4,400. This is exactly what we were looking for on Tuesday, that it's very likely to push to 44.16, 15.16, and then go sideways and then push to 4,400 to 43.96 is the number I gave you the other day. This is what it looks like. This here is the composite chart. So you can see we took out the prior high. and squeezed almost to 4,500. Whenever we get to a century figure from below, we generally turn back. We generally get weak right after. That happened at 4,200. That happened at 4,300 on the first push up, and that's happening again at 4,500. We almost got to 4,500. We almost got to 4,500 last week. But as you recall, Friday was a very weak close with an excess high, and we talked about this again quite a bit on Tuesday. Long show on Tuesday, and really the narrative continues. We have one time framing down here, lower high, lower high, lower high. We're pushing right back into the 43.83, which is a low volume node, and it's kind of a slight double bottom there. It's not quite a double bottom. It's off by about 1.5 points or so. Two little bottoms right there, and it's moving into that area I'm talking about right here. With the monthly VWAP at 43.80. So we have a low volume node and the VWAP and multiple bottoms all in the same area, just from a, combining volume profile with price structure. But again, 42.70 down here, 43, 49, 43.50 up here. These are all important areas. Let me make sure. Okay. These are all important areas. We're looking for the market to return to this balance here before the next push up. Although I don't know that it has the fuel to do that. But there's some demons lurking in the shadows as far as the market is concerned. With the Fed signaling that it may hike. And as I showed you yesterday, the Fed Watch tool pricing in about a 76% probability of a 25 basis point hike in July, whereas the Fed paused in June. And, Powell keeps communicating or reiterating that hikes are very likely to be coming later in the year. So that makes those who are holding at these high prices, stocks have rallied quite a bit. I think the NASDAQ at the high, what was the NASDAQ up at the high? It was like 25% for the year, and I think the S&P is like 22 or 21%. I'm just pulling those. I don't recall exactly what they are. I looked at them last week, and I don't remember what they are. But I think the NASDAQ's up 25% on the year. It's gone a long ways very quickly, and it becomes more and more sensitive to these kinds of news shocks. So again, the narrative is Friday, we open at the high on a gap, we push down, and then we end up finishing right at the low, right back on Thursday's breakout day. Then we have Wednesday, Tuesday's 2 days of balance as our key target, and we hit them right here. And we ended up opening and closing at the same spot on Tuesday, but still leaving the gap open, which actually was kind of surprising to me. We ended up with a normal neutral day with a double distribution. And then yesterday we came in weak. And the expectation is we would remain weak for the session. But yesterday, given the fact that there was quite a bit there in that P, or the upper distribution of Tuesday, the expectation yesterday is it's very likely to push pretty well to the downside. But I could tell you, if you were a Convergent member, the comments I made and the other mavens have made about the action yesterday, but I kept repeating to everybody that it's clear that we should be looking to the short side. You can see that we opened, we tested the bottom of the upper distribution and started to turn down. We want to be short yesterday, but it was very, very difficult to hold a short yesterday. The pop's higher, and I'll show you that in this chart here. Let's go to the ES. It's reloading. So you could see that, it's very clear the open is near the highs. We've run away from the open. We pull back to the overnight low. First opportunity for a short here. But the rotations up were pretty aggressive. The rotations down were extended, but the price action in real time, so on a chart, it looks obvious, right? It always does in hindsight. But in real time, the price action was such that it was really being fought on the way down. And we lost all our bubbles because it reloaded data. I don't like when it does that because I lose all this MBO data. But if you had a glimpse of this when I first loaded it, you would have seen a lot of red going down into this. You would have seen a lot of red dots, and those are bids that just kept getting hammered and kind of causing a small bounce, getting hammered and causing a small bounce. So there was a lot of absorption on the way down, and it made it hard to hold on to the short, in my opinion. But you know, the overall characterization is that our VWAP, our full session VWAP was above, our full session mid was above, the open was above. We are below the overnight low. There's really no argument unless we have some sort of big confluence or a big area or balance beneath us. There's really no argument for a long. And so, but looking at the short side in the ES, not so much in the NQ. The NQ really started pushing lower earlier than the ES actually during the session. It even broke its IB low earlier. You could see in the NQ that it was in the ES that it was really contested on the way down. So I just sat on my hands and didn't do much with yesterday's action at all. We had a 2-tick failed auction. If you recall the session before back here, we had a 1-tick failed auction. We had a 2-tick failed auction, a good bounce right back into the mid, a higher low, and then we went neutral once again, which I had talked about. I said that if we clear the other side of the mid area and start to break, it is very likely to be a strong break higher. You could tell that there was a lot of compression, really a lot of balance right here in the middle, and so that fuel is likely to feed to the upside. So we ended up with a neutral day yesterday, but we finished neutral normal again. So what we did yesterday is very similar to what we did the session before that. So it makes it a little bit harder to read. But the price action itself, the rotations themselves, there are some opportunities there if you just kind of don't mind hanging in there and waiting for things to materialize. This morning, we have a very clear B-shape profile. So we shifted away from the open quickly and we found our buyers. We've moved price low enough to find our buyers, and now we're transacting quite a bit in this 43. What was the overnight VPOC? Like 43.98 and a quarter. 43.98 and a quarter. This is where your point of control is. This is basically where your full session VWAP is. So this morning it is holding. Normally we hold the VWAP. This morning we're holding the full session mid and we're staying at the low end of the range. So unless we put in a higher low and then squeeze through the 44.05, this is very likely to spill even deeper. And in that case, I'm looking for 44.83 and 44.70. So if we push through to the downside, the targets become 83 and 80. Sorry, I said 70, I think. So those are the two areas I'm looking at, about 14 and 17 points below. If we end up pushing through this little double top that we put in at 44.05, that brings us back into yesterday's range. 44.04 brings us back into yesterday's range, and the goal then is to trade the pullback long back into the settlement price of 44.09. That's that would be the trade to the long side. And once we get through the 44.09, you would look for the point of control just above there. So you'd be looking into the 44.13, which was where we stopped in the morning. That would get us the overnight high, and then from there it's likely to just balance out on this magnet zone in this 44.30 44.15 to 44.20. Remember, in the big picture, let's go back to the big picture here so we don't lose sight of what we're really doing. Holy cow. Big picture, we're still stuck in this magnet right here. We're still stuck in this big distribution, this MC point of control. You see it right there, very prominent. So any gravitation towards there likely to have the action. So we stopped at it the day before, and then yesterday we built our point of control right on top of it. And if we pull back to it, then you need to lighten up for the long side because the expectation is it's likely to chop in there in its classic kind of auction method, auction process of going back towards balance. Okay, so that's what we're looking at. The levels I put in, when was it? A week or two ago. We keep going from level to level to level, holding up pretty well. In fact, I should probably take this one off or shift it, but overall, the market's pretty orderly, and this is just a very controlled, very steady, very well orchestrated pullback once we pushed into the 4,500, and that's all this is. The NASDAQ is better behaved, in my opinion. Again, I'm going to switch back to the ES because of the higher volatility. The NASDAQ yesterday hit our 15,000 level pretty well and is has shifted back, pushed back into the low of Wednesday. You could see it right there. The NASDAQ is thin, so it tends to kind of squeeze through key zones or areas and then fall back through, and that's what it did yesterday to settle at 14,044. 15,044, and it's under the 15,000 this morning. So I expect that any attempt higher by the NASDAQ to be contested, and NASDAQ's likely to clear since it's shifted down into this. It's in a very low volume zone here in the NASDAQ into 14,860, into this level right here. So the NASDAQ's pretty clear about what it wants to do. Unless it gets above the 15K and closes the prior settle, the market is likely to find an easier path, or the water as it comes down the slope is likely to trickle down, follow gravity into the next the bottom of the next low volume zone. Like I said, 14,860, and once it clears that, it gets back into, it's very likely to get back into balance here at 14,760. So that's the NQ for you. The RTY really still relatively dormant. It's let's move this over. Relatively dormant. Yesterday, very interesting. It put in a lower low, but as opposed to what the ES and the NQ did, which is to shift lower, the Russell really showed some strength. So it took out the low, took out the high, closed in the middle, and this morning it's trading right in the middle of value here, and it's likely to just chop around in here. The RTY is showing strength, is showing that money's moving into this product, and is really overall is still in balance. So the next key area I have in here for the RTY is around 1855. It has given up a little bit of the volume here, and it's starting to move into the thin area, but really it's very well supported. For crude, if you recall yesterday, and it ended up fulfilling it. If you recall, we were down here, and I said it's very likely to take out the 72, consolidate, and continue to 74. That was completely wrong here because it did the 72, pushed almost to 73 up here, and it just consolidated and boom. And this to me looks like news. It just looks like somebody somewhere said something or did something to the supply to cause this to happen. Technically speaking, the crude oil has been rejecting lower prices pretty swiftly, and now it seems to be, let me kill the fractals here. And now it seems to be just balancing around this area. The balance used to be at 72, so if I bring in more volume, balance is in the 72, but the immediate balance for this run up, as you can see, is right here at 71.10, something like that, and it's currently trading below that at 70.50. So crude is kind of murky for me right now. 70 being a key area that it's tested and retested and tested and retested, and it got to 70.32 this morning, but it's tough. I think crude is a little tough to read right now. So that's the overall view of everything. I'll leave you with that. It's 8:21. I'll let you go get ready to trade. Please take a moment to hit the like button, and of course, if you're not a subscriber, be sure to subscribe to the channel, and I'll catch you tomorrow. Good luck today. Take it easy. It's really nothing major is coming out until next Friday's PCE, as far as the Fed is concerned. So, pay attention to your news feed and just take it easy and just trade your A plus trades. Take only your A plus setups, because this is a kind of environment that's likely to suck you in emotionally and clean you out. So, not a good time to be taking big bets. Okay, good luck.